Hello and good evening. Thank you so much for joining us. Today is March the 15th, Sunday, and we are going to be talking about how to understand the tax filing system, what's new, what's changing for personal and businesses. And today we have with us Ms. Funke Eyitayo. So it's truly a pleasure to welcome you, ma'am. Thank you for your support. And to
Thank you.
everybody, thank you. And to everybody here, welcome. Please reach out to your friends and families to join. This is going to be very important, especially because we all need to do a tax. But before we start, I just want us to do what we normally do, pay respect to our anthem and so on. And so I will call on Oriafe to please play the anthem. Feel free to stand or sit, depending on how comfortable you are. Thank you. Thank you so very much. Canada is a wonderful place to live, and it's so important to continue to appreciate where God has settled us. And so I'm sharing my screen just to show what the agenda will look like. So today we're going to be talking about how to maximize your 2026 refund. We're talking about taxes. We've done Canada, and the agenda looks like this. We're going to continue with the land acknowledgement, and then welcome and introduction. We'll talk about CAP. We'll talk about upcoming events, and of course, introduce our speaker today. It will not be a fireside chat. She's going to be presenting because this is serious business. And then if we have question and answer, any questions or clarifications, we'll go into that. And then, of course, the closing remarks. And so on that note, it's my pleasure to call Oriafe Oluwademeji to read the land acknowledgement in English. Before you start, we read the land acknowledgement on every Council of African Professional event because it is important to respect the owners of the land. And not only that, we have, people of African heritage or Black that are native to Canada. They've been here for hundreds of years, and we want to pay our respect to them and the solidarity and recognize them for giving us the space to be able to live with them. So on that note, Oriafe, please go ahead and read the land acknowledgement in English. Thank you.
Thank you. The Council of African Professionals acknowledges that our office in Burlington is situated upon the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. We recognize that Burlington is covered by the Treaty 14, also known as the Head of the Lake Purchase. As an organization dedicated to the excellence and advancements of African diaspora, we recognize the deep parallels between the displacement of indigenous peoples and the forced migration and systemic exclusion faced by Black communities. We honor the enduring presence of all First Nation, Métis, and Inuit peoples, and we value their spiritual and cultural connections to this land. We also celebrate the long-standing history of Black Canadians, whose presence in Ontario dates back centuries. From the early settlers and the freedom seekers who found refuge in this region to the modern professionals of the African diaspora, Black Canadians have been integral to the economic and social fabric of Burlington and beyond. CAP commits to the ongoing work of reconciliation and equity. We strive to build a professional future that honors the land we occupy and supports the prosperity of both Indigenous and Black communities through solidarity, justice, and mutual respect. Thank you.
Thank you so much. And so I just want to quickly talk about CAP, about Council of African Professionals. The whole idea is to come together, talk together, network together, support each other, mentor each other, sponsor each other, celebrate each other, and, put some publicity to all our businesses. And we focus on everyone, whether it's youth, professionals, entrepreneurs, seniors, basically the holistic family. Because if we focus only on professionals and the children is not comfortable, what have we really done? So the idea is to create that platform where everyone can belong, everyone can learn, they can thrive and be the best they can. And we'll welcome ideas from people to continue to make it grow. Thank you. Today we're going to be talking about let's talk about tax team maximize your 2026 reform. But before we go into the introduction and all, I want to talk about what we've done. So yesterday we actually finished the week-long International Women's Day. The theme was Unshakeable Women Worth Wellbeing in a Pressured World. Whether we like it or not, women are being thrown, a thousand things is being thrown to women. And as the soldier, the general that we have, we take it all in. But how can we cater for ourselves? How can we step back and just be human? How can we be the best that we can be without burnout? And so we brought in various types of women from different cultures and backgrounds to talk to us about this. We will be sharing the YouTube recording shortly in our newsletter. And some of the people that spoke, Miss Valerie Nelson, she's from the Caribbean, she's Jamaican, and she was a retired principal. We had Miss Bayade Simpson, also spoke. She's a governance specialist. We had Dr. Paige Afano, a certified management consultant. She also spoke. We had Miss Christine Eroko, a nonprofit leader and entrepreneur. We had Miss Abby Adekiton, founder of Abby Star Consult and Ire Pathway Corp. We had Miss Oluwabumi Bossede speak. All powerful women doing great in their chosen career. She's a dual qualified lawyer licensed in Nigeria and Ontario. And of course, last night we had Ms. Sedosa Adams-Sidode, a dedicated lawyer, community advocate, and mentor, speak. Now, what are the upcoming events that we have? We have our language schools coming up. It will be starting March 28th. Igbo, French, Yoruba, Mandarin. If you know anybody that can teach us any language at all, please reach out to us. We are still accepting essays for our in-person event in St. John, New Brunswick for May 9th. If you know anybody there, please tell them to be part of this. We have 3 categories that they can take part in. And we have one happening in Ontario on June 20th. We will be accepting essays till April the 12th. The event in Ontario is going to be really wonderful because the keynote speaker is already confirmed, Ms. Nosa Ero-Brown. She's the Deputy Minister for Citizenship and Multiculturalism for Ontario. It is important. When you move outside of your comfort zone, you tend to meet a lot of people. And of course, our guest speaker is Olamide Konluyomi, a young man. He founded a nonprofit and is also an author doing amazing things in the community. And upcoming is our CAP mentoring cohort Uno. It means the first one in this year. If you want to be a mentor or you want to be a mentee, please reach out to us at capprofessionals.org@gmail.com. And it is important for us to say, shout out to our small businesses. In case you need their services, these are some people that we have validated. They've supported us because, we're nonprofit, we don't make money. We live on grants and the support of small businesses. And so when they support us, we want to support them too. First on the list, we talk about doing your taxes. SDA Business Solution. If you've not done your taxes, reach out to them. They can help you not only with taxes, business consulting, incorporation, payroll, bookkeeping, and the likes. Their email is sdabizsolutions, info@sdabizsolutions.net, info@sdabizsolutions with an s.net. Reach out to them for your taxes. Are you looking to, create memories, whether it's personal or for business, or those milestones? Reach out to Kixo Pixel. That is their IG name. Insurance is very, very important for everybody. If you have a family, you must have insurance. Tomilalo Ogundipe is an independent insurance advisor. A phone number and email is there. If you need any of their details, please reach out to us. Mother's Day is coming. We just finished International Women's Day. Are you looking to buy a really beautiful gift for your mothers? Reach out to uniquedesigns.ca. Their website is www.uniquedesigns.ca. They have premium products, gifts that people can actually use. If you want a dose of reality, check out my book, Authenticity. It's in Amazon. Are you looking to create a website? Amazing Minds, Shade at amazingminds.ca can help you with any budget. Reach out to her. The power of prayer is very, very important, and we are very grateful to Archbishop Prof. Williams for supporting Council of African Professionals, the Archeon Days International Church. And of course, this is a digital studio where I support women, youth, and new immigrants. And of course, we've had supporters in the past, and we continue to do shout out to them because we want them to continue to support us. BPTN, RBC Royal Bank, Canadian Race Relations. There's so many people doing some of the things that we do in the community, and they do support us. They come together to make our job easier. Alliance Creative Community Events, led by His Royal Highness King Nanayo Osam I, African Caribbean Council of Alton, Grandmothers Voices, Seas Center, the Care Foundation, Black Business Edmonton, United Colors of Fashion New Brunswick, ACAL Ottawa, and NIROV. Now, we have two main events. One, I've talked about it happening in May, June, and this one is happening December 11th and 12th. If you've ever heard of Power of Inclusion, that is the Power of Inclusion going forward in 2026. The name is now the Platform Canada. We're looking for voices that shape change. Are you interested in speaking? Reach out to us at capprofessionals.org@gmail.com. We want voices that change, that shape change. We want to shape policies. We want to celebrate leaders also. A lot of people are doing a lot of great things in the community, and we want to celebrate them. So if you have anyone you'd like to nominate, please reach out to us. Let us appreciate them together. We have different nomination criteria. If you need to know more, please reach out to us. Our contact is, the website is www.capngo.ca. Go to our website to learn a little bit more about us. Our email is capprofessionals.org@gmail.com. And newsletter. The newsletter is important because before anything hits the social media, you will get it in the newsletter first. So subscribe to our newsletter so that you don't miss out on any information or program that is coming out from our stables. I am going to stop sharing and I will be introducing Miss Funke Eyitayo so that we can get into why we're here. I'm excited. I hope you're all excited and you're ready to learn. Again, please reach out to your friends, reach out to your families so that we won't be the only one benefiting from this. But I'm happy that it is recorded. But recording is one thing, being present is another thing, because you have the opportunity to ask questions live. So it is my pleasure to introduce Ms. Funke Eyitayo. But let me start by introducing myself, your host. So my name is Adejisola Hatiba. People that know me know that I wear many hats. Professionally, I've worked in Nigeria and in Canada. I worked in the bank. I literally retired about after 32 years in the banking industry. Educationally, I schooled in Nigeria and Canada. I have multiple degrees and professional certifications, including a chartered directorship designation and an executive MBA. I'm retired. With regards to community advocacy, I was past president of Rotary Club of Milton, past president of African Caribbean Council of Alton, and president of Council of African Professional, past board member of United Way of Alton and Hamilton. Currently, I am a consultant. I'm into board governance, strategic planning. I'm into script writing, mentoring. I'm a published author and a serial entrepreneur. Born in Nigeria, honored as a Queen Mother, and it is my pleasure to be with you tonight to facilitate this conversation. So who is going to be speaking to us? It is none other than one of our supporters. Herself and her husband and their business have been supporting us since like forever. So we thank you, Ms. Funke Eyitayo. So Olufunke Eyitayo. PCP. Okay, so when you speak, you're going to need to explain to us what PCP means. PCP, I know what MBA means, and of course, fellow chartered accountant FCA. Funke is a graduate of the University of Lagos, a fellow of the Institute of Chartered Accountants, ICANN, a member of the Chartered Institute of Taxation Nigeria, CITN, a qualified payroll compliance practitioner, Canada, and has an MBA in finance from the University of Liverpool. Funke currently consults for a number of organizations in various capacities as an experienced and results-oriented business support person with extensive knowledge of finance, accounting, taxation, audit, payroll, and human resources, procurement, and administrative logistic functions. She's happily married with children. Please, let's welcome Ms. Olufunke Eyitayo. So before you go into your presentation, please, what was that then? PCP. What
PCP, payroll compliance practitioner.
I see. So important. There's so many acronyms, right? So
yeah.
If we're able to break it down, it just makes life a lot easier. So welcome. Is there anything apart from what I said that you like people to know about you? Anything else?
I think the bio summarizes to an extent. I think the only thing I'll probably want to add there is that coming to Canada, we came in with, when I say we, myself and my husband, we came in with our ICANN certificates, assuming or presuming that, you could practice, do whatever it is you do back home with the certification and qualifications you have. But when you're doing your migration, they come with, you're coming as a skilled worker. But when you come here, I'm sure everybody encountered that you had to go back and relearn or redo or do an upgrade to whatever skills you are bringing to the table. So for us, ICANN just did not cut it with Canada. We had to go on to do the CPA, that's the professional accounting certification for Canada, and we recently concluded that. So that is an addition to what is on my bio, but I can't put it wholesomely there until I'm done the, you know, when they say induction and all that. So that's just the add-on I want to put there. Thank you so much.
Wow, congratulations. Whether induction or no induction, you've done the exam. Congratulations.
Yes, we have.
That is a fantastic one. Wow.
Yes.
I'm super, super excited and happy for you guys.
Thank you
Congratulations
so much.
to you.
Thank you.
Thank you so much. And please go ahead. What do we need to know? I'm going to put up my camera because the stage is on you. What do we need to know about the taxes? Thank you.
Thank you very much. Thank you, CAP, for the opportunity to highlight the tax scenario to our fellow Nigerians, our fellow Africans, and then any other person joining. Hopefully, you'll be able to take some things away from this meet. And if you do have any questions, please feel free to ask. I guess there will be a Q&A session at the end of this presentation. Without taking too much of our time, I'll jump right into the presentation. So basically, my goal is to bring up the changes in the tax scenario for individuals and corporations. In between, there are some things that have not changed that will be advisable for us as individuals to take cognizance of ahead of filing our taxes. So I'll move to the next slide. Okay. So the first question is, who needs to file taxes? Once you're a deemed resident of Canada for tax purposes, you are expected to file taxes. When they say deemed resident, your residency status is the issue they use to determine whether you're expected to file for a specific year. So in a specific year, you could be a deemed resident. In another year, because you're not living in Canada or you're not earning income at any point in time, you're not deemed a resident. So depending on your residency status, you're expected to file taxes if you're a deemed resident of Canada. Now, just to buttress that, Canada is one of those countries that say wherever you are, your worldwide income is what is taxable in your hands. So what that means is whether you're earning your income in Nigeria or you're earning your income in the US, once you're a deemed resident of Canada, those incomes become taxable in your hands in Canada. So the only difference will be that if it's taxed in Nigeria and the taxes are already excessive because of the treaty Canada has with Nigeria, the taxes are limited to what you would pay if you were in Canada. So let's say, for instance, you earn 50,000 and Canada's tax rate is 10%, Nigeria's tax rate is 15%, and you've paid 15% on the taxes. Because Canada's tax rate is 10%, is lower than the 15% of Nigeria. So there's no excess tax to pay. But if it's flipped, Canada's tax rate is 15, Nigeria's tax rate is 10, you've paid 10% in Nigeria, the remaining 5% is taxable in your hands in Canada. Any other questions with regards to that? I will not be able to explain in detail because it becomes technical and it will have to be a different session. But however, just suffice to say, the treaty comes in, your worldwide income comes in, and you kind of have to understand and know that for your tax situation. Individual taxes, we have key dates and deadlines to take note of. The tax season is officially open. It opened February 23rd for 2025 season. March 2, that has expired as well if you didn't take advantage of RRSP contribution deadlines. Sorry. April 30th is the filing deadline and payment deadline for individuals. So filing deadline for employees. So if you're an employee, you earn a T4, your filing deadline is April 30th, 2026 for 2025 taxes. For individuals who earn a T, whose income is reported on a T4A, or who are what we call entrepreneurs, self-employed, your tax deadline, filing deadline is June 15, but payment of those taxes is still April 30th. So technically, that means you must have gotten your taxes to a state where you know how much you're paying for taxes by April 30th, and you pay those taxes, even if you're not filing your returns yet as a self-employed individual. So June 15 deadline for self-employed, April 30th as deadline for employed individuals. Payment of taxes for individuals, whether self-employed or employed, is April 30th. A bit complicated, but that's it. Who can file taxes? So here, there is no law within Canada that says you must use a tax preparer or a tax professional to file your taxes. You can file yourself, you can file with a third party. However, the complexities with each person's tax situations now inform you as to whether you should get a professional or you want to dabble into it yourself. If you feel like dabbling into it yourself and you know what you're doing, then I'll say more grease to your elbows, but it's usually advisable to work with a professional. Now, I put the cost there as from 0 upwards because there are some volunteer institutions, volunteer companies or corporations that file taxes for people who have uncomplicated tax situations, and they do it on a volunteer basis, so they don't get paid. However, if you have a complex situation, your taxes will not be taken up by these individuals. You would also be advised not to handle it yourself because we've put the word complex in front of it. You can try it, and if you scale it, that's fine. If you use Chat GPT-2, to an extent, you might fly, but there are just some things you don't want to ask Chat GPT for in case you get into what you're not supposed to get into. So it's advisable to use a third party, a professional, but if you know what you're doing, then it's also an option. There's no rule that says you must use a professional. I've spoken about the deadlines, the timelines for filing. The only add-on here is for corporations. If you have a business that is registered or incorporated, then this is for you. When I say registered, I mean incorporated. Registered business name that falls under self-employed. That's a sole proprietorship. So that your deadline for filing is June 15th. For corporations, your deadline for filing is 6 months after your year end. So if your year end is December 31st, 2025, you're expected to file your taxes by June 30th, 2026. However, your tax payment for your corporation is expected end of March subsequently. So if your year end again is 2025, 31st December 2025, your tax is payable, your taxes are payable March 30th, 2026. your tax filing is due June 30th, 2026. So kind of like March for payment, June for filing. That is if you're a Canadian controlled private corporation. For public corporations, your taxes are due by the second month, that is February of your year end. So your year end is December 31st, 2025. Your taxes are due February 2026. Your filing due June 2026. Deadlines continued. We have GST, HST, your monthly and quarterly. If you're a monthly or quarterly filer, you're due to pay your filing is due 1 month after your period end. If you're an annual filer, you're due to file 3 months after your year end. So when they call you a monthly or quarterly filer, CRA tells you what your filing requirements will be. So depending on how much income you make, they require you to make frequent payments. If your income is, I think I didn't categorize those incomes, but if you're a high income, I think in the millions, you're paying your GST or filing it monthly. If it's less than that, then quarterly. But if it's lower, unfortunately I didn't get the breakdowns out, so my apologies for that. You're now an annual filer. That is, you file one in the next year. So for 2025, January to December 2025, you file by March ending 2026. RSP contribution deadline March 1st. I think we already said that. What to do when you can't pay your tax bill on time. So for individuals, corporations, if you are unable to finish paying whatever you are owing CRA for taxes, you're able to negotiate a payment plan with CRA. Usually the payment plan is restricted to 1 year. So if you're owing, let's say 10,000 and you can't pay the 10,000 all at once, you can negotiate a payment plan with them. It does not stop the interest from, amassing, but I think they will freeze the penalties because you have a plan. However, your plan that you make with them, you must comply with. You can't make the plan and then decide not to follow through on it in month 3 because something came up. Moving on, areas of interest, tax-free savings account contribution room, 7,000. It was increased, I think, 2 years ago from 6,000 to 7,000. Your basic personal amount, this means, so if you earn an income, your income is, for 2025, your income was 16,000 and below, that income is tax-free. That means it is not taxed. But anything over and above 16,129 becomes taxable in your hands. The tax rate for that we'll address in the next slide, but I think this is important for especially very low income earners, like maybe your child is 17, 18, 19, and they're just doing part-time jobs. The ideal thing for your child's employer will be to do the tax deduction at source in his T4, but know that when he files his taxes, those taxes that he paid will be refunded. CPP-EI will not be refunded because those are things that are put towards his or her future, but the tax paid will be refunded. Okay, so we are at the tax rates now. Here, there was a change in 2025. For 2025, this 14% was initially 15%. So the tax rate for anybody earning 57,375 or less is at 14.5% as against the 15% you have been paying before. This other rankings, the 20.5, the 26, the 29, the 33% are the same, but the amounts on the site changed as well. But I would restrict conversation to 14.5% for 57,000 or less, just to give you an understanding of how this works. So from 15%, if you had 15% times 57,000 before, and you're now being charged 14.5%, you have a savings of 0.5% in your taxes. Remember that in the previous slide, this previous slide, I said if you were earning 16,129 is tax-free. So if that is the case, and we have 57,000 here at 14%, what usually happens is you take out that 16,000 from 57,000. The difference is what they charge the 14.5% on. So if you have that understanding, the same thing happens for between 57 and 114. 16,000 tax-free, between 16,000 and 57,000 is 14.5%. Then between 57,376 and 114,750, whatever income your income falls in there is at 20.5%. RRSP, for those that contribute to RRSP, the dollar amount limit for 2025 is 32,490. So you can't exceed this as a contribution to your RRSP. However, in calculating your RRSP, you're limited to 18% of your earned income. So if your earned income at 18% exceeds 32,490, whatever the excess is, you can't take advantage of. So you are limited to 32,490, of which you can't exceed your contribution room. So even if your income hits the 32,490 threshold, your RRSP room for the year, you cannot exceed it, and that is always calculated on your prior year income. RESP contributions are for our children contributing for their education. We usually encourage individuals to contribute to the max that you can, so that you can take advantage of the grant that comes from the government. So if you do a 2005 contribution per annum, you get a 500 contribution from the government for that year. Government contributes 500 per year, and that limit is 7,200 in the lifetime of that child. So once they hit that 7,002, government grant on that RESP ends. However, your 25 should continue to grow in your child's RESP account. The funds are invested. Whatever the yield is, it yields into your child's account, and you're able to use it for their higher education, their tertiary, university, or whatever it is they want to use the funds for with respect to education. The CPP contribution ceiling also increased to 74,600. I'm sure for those that are in employment or self-employed, we are expected to make a contribution to CPP. Your ceiling for 2025 is 74,600. The old age security amount, you have a threshold of, they had a threshold of 93,000. That means in a year, if you earn 93 over and above 93,454, anything over and above that is subject to the clawback. That is, government will take some back from you. So this threshold was increased from 93,454 to 95,323, meaning you're able to hold back about 2,000 more over and above the initial amount. I've discussed this federal top-up tax credit. So initially tax rates were at 15%. It has been reduced to 14.5%. They are targeting 14% for 2026. Home buyers credit, if it's your first home you're buying, this credit started December 2022 for people who are who buy an eligible first home. Initially the credit was 5,000, it was increased to 10,000, and this credit could actually give you a tax savings of up to 1,500. There is also the first home savings account for those that have not purchased their homes. This amount, this account is like encouraging people to save towards purchasing their homes. It's a tax deductible contribution, just like your RRSP. But the difference between this and the RRSP is if you withdraw from it to buy a house, you must use it to buy a house. If you withdraw from it for any other purpose, it becomes taxable in your hands. But if it is withdrawn for the purpose of purchasing a first home, it does not translate to income. So for instance, you contribute 8,000 in 2025, and we are calculating your taxable income. We take out that 8,000 that you contributed towards the FHSA. It's not taxable. But if you withdraw from the FHSA savings for any purpose outside of buying your house, whatever funds you withdraw becomes taxable in your hands. Disability support deductions. There were this allows individuals with physical or mental impairments to claim expenses that enable them to work, attend school, or conduct research. Initially, for this, there were a restricted number or values of expenses that you were able to claim, but they've opened it up now a whole lot. You know, there were just some things that you couldn't claim before that you can claim now. Things like computers, maybe you need someone to take care of you, you bring in the person, your bed positioning devices, digital pen devices, ergonomic work chairs, things like that. But they have to be approved before you go shopping. You go shopping and you want to force it, is not going to be accepted. So just like you're claiming disability credit for whichever child is, you know, a beneficiary, you have to go through your doctor, they approve it, they confirm it, and then you file it through CRA. It has to be approved before you can, you know, take advantage of this credit. If you're self-employed, I've touched on this before. You're responsible for tracking your income and expenses and paying your taxes each year. It's different from your employer. If you are employed, who tracks the taxes, deducts the taxes, deducts CPP, deducts EI from your monthly payments before giving you your net pay. You are responsible for tracking income, expenses as a sole proprietor or a self-employed or a corporation. What you're liable for as taxes: you pay federal taxes, you pay provincial taxes, you pay CPP, you pay EI on your income. Filing your taxes is also the only way to be considered for government benefits such as provincial or territorial taxes. That's the GST, HST credit, and then the Canada Child Benefit. As a self-employed person, if you make income, it's recommended that you keep 25% or 30%, you set it aside for tax purposes. Usually, if you earn, if your taxes for prior year was 3,000 and above, the expectation is you're supposed to prepay your taxes for the next year so that your taxes do not choke you when it's time to pay. But a lot of people don't do that. A lot of people don't follow through on that. And then when it's time to pay, it becomes a hassle. So the advice we give to our clients: set aside some funds. Yes, it's difficult. You have a whole lot of expenses to incur. You have your bills to pay, your children's school fee, not school fee, your children's sports activities, whatever activities they need to do. And sometimes school fees if your kids are in university. But irrespective of your financial responsibilities, you also are financially responsible to pay CRA taxes. So it's advised that you keep that in mind and, try and set those funds aside so that at the end of the year, when you're supposed to pay those taxes, it does not become a challenge for you. For self-employment, how to file. Your filing is done on what we call a T1 general, same as individuals. You also fill the form called the T2125. That's a statement of, your business income. Becomes technical here. And then you also have to file a separate GST, HST return. So your filing requirements are in 3 parts. 2 go together, the T1 and the T2125 go together. The GST, HST return is separate platform, separate filing. We have tax credits and deductions. Tax credits are equal to benefits. There are equal benefits to everyone to reduce tax owing. So you pay, you make donations to your place of worship. You pay for subscription pills. Those give you tax credits. Now, those tax credits are split into 2. You have what they call the refundable tax credits, and then you have what you call the non-refundable tax credits. Non-refundable tax credits, they stay in your tax activity. It doesn't come to you as cash. It reduces your tax payable. But refundable tax credits are the GST credits, which you get by virtue of, you live in Canada, or you live in a specific location, or you have X number of children. The credit is a factor of your income, the number of children you have, the number of whether you are married or no, or different criteria like that. Tax deductions, these are things that reduce your taxable income, like the IRS we spoke about, your first home savings account contribution we spoke about, your pension and childcare expense. Yeah, so childcare expenses are limited to, you pay daycare expenses, not you sent your child to swimming school or things like that. So childcare expenses, disability expenses, moving expenses, home office expenses. This home office expenses is only applicable at this point where your employer approves it. If you're working from home by choice, or for whatever reason, and your employer has said, no, move back to the office, you staying at home becomes a choice. So you can't claim home office expenses at that point. If your employer, however, expects that, you can work at home and he signs off on it, then you can claim those expenses. So if I wanted to file your taxes for you, you ask the question, so what do I need for you to file taxes for me? Or what do you need for you to file your taxes yourself? Sometimes we miss out on some information because we do not know better. The key information is on the first line where you have your T4, T4A, T4E if you're on employment insurance. If you're collecting employment insurance, that's what we call EI. If you have T5 income, maybe dividends or interest income from your bank and things like that. Other data, maybe you have investments and you incurred some expenses in buying or making those investments. That's what they call carrying charges, or you are part of a professional body. You pay your annual dues for that professional body. Things like that. Other income, maybe you own an Uber business, you're doing Uber, you're doing Uber Eats, you're doing I can't remember the other one now, Lyft and all that. That adds to your income. That is also taxable for self-employed people. Other things that you consider: charitable donation, contributions, medical expenses, moving expenses. So like all this factor into your tax filing. If you're filing for yourself, you don't know what document to populate for this, you're leaving money on the table. So it's important to understand that, yeah, this list is not exhaustive. There are some things that are not here, but key information, this. So if you're self-employed, you own a business, you're not required to register for GST or HST if your business revenue for 4 consecutive quarters is less than 30,000. But once you hit that 30,000 mark, you're expected to register for HST, collect HST, claim HST. For capital gains, I hope I'm not just I hope I'm not just writing, and there are just some things that now become over and above what people expect to see in a tax presentation. Capital gains, this was a bit dicey through 2024-25 because government wanted to move the inclusion rate from 50% to 66.67, but it did not get approval from the approving bodies, so it remained at 50%. So currently, you sell your property, you sell your investment, inclusion rate is 50%. That is, let's assume I bought shares for $10,000. I sold the shares for $15,000. I make a profit of $5,000. Of that $5,000, they split it into 2. That's the 50% inclusion rate conversation. It now becomes, the 2.5 becomes taxable. Now, what tax rate is applied to that 2.5 depends on your tax bracket. So we went from whatever level of income you're at. So if your personal income from your employment, from your self-employment, whatever, is 57,000, that's the 14.5% threshold. Add 2,500 to that, it now moves you from 57,000 to the next percentile, that's 20.5%. So your 57 is taxed at 14.5, then the remaining 2,005 is taxed at 20.5. So it depends on what tax bracket you're at. If you're at the very high tax bracket, then whatever capital gains you make worsens your situation tax-wise. There's another terminology we use, lifetime capital gains exemption. This is with respect to you own shares in a corporation or in a small business. When you sell your shares and all that, the capital gains on it, there is an exemption for a specific limit above which you now pay taxes. For corporations, we're moving to corporations now. We have what we call the small business deduction. We have what we call the actual tax rate. So actual tax rate is 38%. If you're a small business, your tax rate is reduced to 9% for the first 500,000 of your income. Anything over and above that 500,000 now moves to the next tax bracket. Same thing almost the same thing as individuals, but not strata that way. Just 2 for corporations, the 9% for small businesses and all that. So this small business conversation is only for Canadian controlled private corporations. That is, you're a private corporation, not a public corporation. Public corporations, their tax rate is different, 38% straight. There's no deduction, there's no concession and all that. You now stop being a small business when your taxable capital employed is over 10 million. So I won't get into too much of this because it becomes technical and we may not live here tonight. So for your business as a corporation, here a lot of people try to, move under the radar. Oh, the reason why I want to incorporate is so that I can expense so much. I can expense this, I can expense that, I can expense that. I would hate to be the one to bust that bubble, but there are just some things you cannot expense. You can't expense everything. Anything that is not business related, you can't expense. I was having a conversation with a client this evening, and he set up a not-for-profit, but he has a for-profit business he also set up. And the not-for-profit was set up for research purposes and XYZ. And he felt he could, use his business, the for-profit business, and, use the not-for-profit as an expense head for the for-profit. But unfortunately, the not-for-profit, the articles, the intent and all that is not for the for-profit. So you can't make an expense in your corporation for non-corporation related expenses. Sometimes we want to do our grocery and send it as your business expense. That is not ideal. Yeah. In some clients' expenses, we see African food store, all those kind of expenses in your business bank statement. It's not ideal, because if CRA does ask for those statements, you're expected to submit them, and when they see such transactions, they know they are personal expenses. So business expenses, strictly business expenses, or things that you can actually prove or justify as business expenses, is not anything goes. For businesses, you're expected to file what they call a T2. That's your corporation income tax return. I've spoken about the small business deduction, common business expenses, fuel cost, rent if you're paying rent for an apartment, for instance, or you're paying rent for the business itself, and in that apartment you are using a portion for your home office. It's just that portion that is deductible, not your 100% rent. Mortgage interest, it's only when you have a rental property or you have an investment business. Mortgage interest you can't deduct. If you own the property, you're using a portion of your house as your home office, you can't deduct mortgage interest as a business expense. Your utility bills, a portion of it, your car insurance, a portion of it. That is if you're using the car for business purposes. If the car is 100% personal, please keep your expenses as a personal expense. The maintenance, the bank fees, your phone bill, internet, parking, professional fees, like you're paying an accountant to do your taxes, or you're paying a lawyer to take a look at something for your corporation or for your small business, those expenses can be written off as a business expense. Certain meal and entertainment expenses, office supplies, that too. There are some technicalities underlying meals and entertainment, so you have to be careful when you're expensing on that as well. Okay, I don't think I need to, speak high level on this. Basically, if you have a tax preparer, all these are things you could ask them for. This capital cost allowance, the other one of depreciation. So depreciation is not allowed in taxes, capital cost allowance. I'm not sure I can explain that to lay people, so I'll just leave that and move on. For research and development as well, there are some credits for those entities or businesses that qualify for it. You get the credit if you invest in it. Immediate expenses for capital expenditure, that's for this manufacturing and processing transaction. Also, if you're into manufacturing and all that, you buy a property, you are able to benefit from the capital cost allowance as a CCA. Again, I won't be able to, break that down for you to understand. What next? Okay, thank God. I was almost thinking, I still had so much to do. Okay, so I'm down to the last page of my presentation. I don't know if there are any questions or if there's something I was too fast going over that you want us to go over again.
Thank you very much. I mean, it's a lot of information, and I'm happy that it's recorded because we can always review it. When you said we're at the end of personal, we're now going to corporate, somebody actually said, can we ask question now? So, I will call on Stella. Great, so you have a question. Please go ahead. Oh, I think she's not able to speak. She said, you mentioned about capital gain 50%. What about, let me see. You mentioned about capital gain 50%. What about those who do day trade, incurring daily trading expenses? Will they be taxed as capital gain on normal business expenses, I think?
Okay, I'll assume I understand the question. Whatever expenses you incur in doing your trading, those expenses are business expenses for earning your investment income, right? So those expenses are liable. If you make a profit on your trading, those profits are taxable. So the only time you make a profit is, let's assume you invested $10,000 on your investment. Your investment yields 2,000. That means at the end of it, your investment now is worth 12,000. That means you make a profit of 2,000. But before that profit can be recorded as profit, let's say, for instance, the site you're using for trading, the person trading for you charges you $500. The site and the person $500 for maybe a year or whatever. That $500, you take it out of the 2,000 you make. So technically, your 1,500 now becomes taxable. But remember that it only becomes taxable when you sell that investment. If the investment is still running and accruing profit or making losses, all those are still unrealized. That is, it has not come back to you. It is only when it comes to you as a sale, then whatever comes to you, either profit or loss, capital gains or capital losses. I hope I answered your question.
So I was going to just give context, but I see she has written the same thing. Maybe I can provide a bit more perspective.
Okay.
A day trader in this case is somebody that is buying and flipping the share several times in the same day. So it's not taking an investment position over a long period of time, in which case you can isolate it. It's cumulative, it's repetitive. So essentially, you buy one stock, you sell it, you make $50, you sell another one. So you keep using the whole capital. Even the profits are reinvested in other things across the entire period, which makes it a bit tricky to, maybe categorize it the way you said. And so maybe how I understand it is that if you look at the portfolio at the end of the month, you started with $1,000. At the end of the day, it's worth $1,400, for example. Then your effective profits, your gross profit at that point will be $1,400. The reason why I think this person is asking is because to measure it on a per transaction basis, especially when the profits are also being reinvested multiple times during the month, is where the real question might be.
Okay, so the thing is, technically it's still the same logic, right? Whether it's day trade or it's 5-year trade or it's 10-year trade or whatever, it's still the same logic. Once you buy and you sell, whatever profits come in, those profits become taxable. So even though you are seeing it as you're putting back those funds, whatever you're putting back is a new investment. The old investment has been sold. That old investment sold is taxable at the point it has been sold.
Does that apply even when it is within the platform, within the trading platform?
Well, let me
withdrawn your money from the trading platform, so it's not realized at that point.
No, so let me add to it. When you are a day trader, you're selling because maybe you've seen a profit, and that profit, it could either be interest, dividend, or capital gains as the shares increase in value, because that's really where the capital gains comes into play, and you sell it. There shouldn't really be any. Okay, so maybe I should put it this way: at the end of the year, that organization will give you a slip.
Correct.
So you don't need to calculate anything yourself, because they know the transactions you've done. Whether you sold at a loss or you sold at a gain, or you got dividend or you got interest, they will give you that slip that you will give to your accountant.
Correct.
So that is really what you need to give to the accountant, and they will deal with it.
Okay, Stella Green, has your question been answered?
Sorry, it will actually show them different boxes, that box 22, box 30, all of them have their description, so they will give that.
Yeah, it's answered. Thank you so much. Yeah.
Thank you, Stella. Great. I do also have a question around capital gains.
Okay.
So hypothetically, you had capital gains maybe 2 years ago, and this year you have capital loss. How is it treated?
So, should I say come for consultation?
Okay.
Okay, short answer. You made capital gains 2 years ago, you paid taxes on it. This year, you made a capital loss. You have the ability to write back, walk back, claim back. What other language can I say? You can go back 3 years. You can go back 3 years, maximum 3 years. So if your capital gain was 2024, for instance, and you sold something, okay, no, let me do 2023, for instance, and you sold an asset in 2025, making capital losses, but in 2023, you made a capital gain. You can walk back 3 years or carry forward your losses, depending. So going back, you had paid taxes on that gain. You can get a refund based on this loss. So whoever is filing for you needs to be able to have that knowledge to be able to claim the prior year tax paid, or you carry it forward if you're into that business and I mean it's still ongoing. But the advice I will give is claim what you can, because those 3 years is a limit, right? You may not get capital gains again for another maybe 4 or 5 years. So it's advantageous for you to claim the prior years and then walk forward thereafter.
And how long can you carry forward a capital loss? Is it still 3 years?
No. I think depending on the type of capital loss, it's 10, and then some indefinite. I don't have the what's it called offhand. There are some that is 10 years limit. There's some that is 20, then converts to business loss. Then there's some that is limitless, as in it goes on. You can claim it. There's no timeline. So Don't quote me on what specific one you can, retrieve. I mean, you can carry, how long you can carry forward one or the other, but you can carry forward some 10, some 20, and then some indefinitely, and some switch from one type to the other.
Thank you. Thank you very much.
No.
I don't know if anybody else has any question or comments.
Can I ask a question then? On the corporate side, I know you touched on it a little bit, but you seem to only speak about a tax rate for companies. Are there any other taxes that companies pay statutorily, or any other specific things that may be industry specific that may apply outside of the corporate income tax?
Okay, so maybe if you specified what industry you're speaking about, I may be able to give you an idea. But the general one, you have HST, GST, you have the corporate taxes, you have the payroll taxes that you deduct from employees. I think that's basically a summary of it. For Ontario, that is it. For Alberta, for instance, there is another type of tax you pay. For BC, there is the health tax that you pay outside of the regular, what's called. So it depends on province, and then maybe the type of business you're talking about. So if you maybe want to be a bit more specific.
Okay, so I'm curious because I know that in some markets, oil and gas companies, for example, have special taxes that apply in that segment, but I operate more in the technology space, and there are some tax incentives or benefits for technology startups or technology companies in certain domains, but I'm relatively new here, so I was just hoping to know if there's anything there.
Okay,
for new businesses or tech startups.
So if you're asking specifically for tech, it will probably be a research question, because I can't know about each and every what's it called, sphere of business. That being said, I think recently there were some regulations surrounding tech companies with respect to assets they buy. There are some capital costs allowance incentives for them, where maybe ideally you should have claimed 50%, they allow them claim 100%, but industry specific, you kind of have to ask the specific question and then someone does the investigation or research for you. I don't think there's someone that will be able to tell you oh yes or no at this point. Well, I can't anyway. Maybe somebody else was, not me.
All right. Thank you very much.
No problem.
Is it best, there's another question. Is it best to accept T4 or T4A for a contract job? Please explain if T4A is mandatory to enroll with business incorporation or personal name with the company employing.
So there is a mix of so many questions in that question. T4 versus T4A. It depends on what you're trying to achieve, right? Some people will insist on a T4 because, let's say for instance, I want to buy a house. A mortgage broker, a bank will prefer a T4 to a T4A. As an individual, I'll prefer a T4A to a T4 because at my discretion, I can pay my taxes. On a T4, I don't have a say. My employer has to take out the taxes from the word go. The CPP is taken out, the EI is taken out, whether I like it or yes. But on a T4A, you give me my money and I pay my taxes and I pay the CPP I'm supposed to pay when I'm filing my taxes. But outside of that, I'm free to do whatever I can or I want to with the balance. So it depends on what you want to achieve. It depends on your goal. It also depends on the person you are working with. Like, in a bank, for instance, the type of jobs that they put aside, if they are contract roles, they are indifferent as to whether you take a T4A, T4A. But if it's an employee role, they are insistent on it, you take a T4. If I'm working for, let's say, Gray Matlock, for instance, Gray Matlock says, oh, he doesn't do CPP or EI. He wants to give you your money, go and sort your taxes out. You'll get a T4A at the end of the year. So it depends. Company policy, what does the company say? What does the employer say? What do you want to do? If you own your company, like a sole proprietor, you registered a business, then you tell whoever's advert you responded to and say, oh, I don't want to earn employee income. I want to be a contractor. If he agrees, then a T4A will be your means of statement of earning. But if he doesn't and he says, no, I don't want contractors on my team, I want employees, then you have the T4.
So thank you so much. I just want to quickly add to it. And I think you cannot differentiate it. You said if you're an employee, you don't have a choice.
Yes,
you have a T4.
Yes.
But if you're kind of like a contractor,
Mm-hmm.
You're a freelancer,
Mm-hmm.
you probably don't have a choice too, because they'll give you a T4A. They're not deducting EI, they're not deducting CPP, they're not deducting taxes. You're going to be taking care of yourself. So I think the difference here is employee, contractor.
Correct.
Right? So that's basically the way it is. There's some that you don't really have a choice. If you're a contractor with a bank, for instance, there's so many people that will say, oh, I'm consulting for this bank, or I'm a project manager for this. And most of them are contracting jobs. They will get all their money upfront. And most of the time, people that they give T4A for do not benefit from them at all, like health benefits and things like that.
Correct.
So, yeah. I think there's a follow-up to that. Is an employee role as contract, or recruiter asks if you want? I'm not. Is an employee role as contract, and recruiter asks if you want T4 or T4A. I don't know if you're able to explain that, Stella. Contract staff. I think she's not able to speak.
You want to come in as a contract staff, but the recruiter is asking whether you want to be earning earning as an employee or as a contract staff. That is, if they at the end of your engagement, should they give you a T4 or should they give you a T4A?
Yes. So coming in as a contract staff for 7 months, yes.
Yeah. So is your question which is better?
I think so. Is that what you're asking?
I can't tell you which is better.
It depends on your situation. Right?
Yes, it depends on your situation. It depends on your goal, again, as I said. So sometimes you want, again, to take money from a bank as a loan. Bank will favor a T4 than a T4A. Your perspective is you want to carry your money home and pay taxes at your convenience. Then a T4A will be your go-to. If your contract is just 7 months, whether T4 or T4A, if it's just an issue of, because it's 7 months, there's really no, it's neither here nor there. You can do a T4 or you can do a T4A. It's your preference, right? The main thing you need to understand is it is your preference. What are you trying to achieve? When you know what you're trying to achieve, then the issue of whether T4A or T4 now guides you either way.
Decola, please go ahead.
Thank you. So if you're a newcomer, hypothetically speaking, you arrived sometime in December 2025, and now it's 2026. Are you required to file taxes?
Yes, even if you came in 31st of December 2025, for
Okay.
that one day, you file taxes.
Okay. And then what would you need if you haven't worked at all?
So your landing documents,
Okay.
your SIN number, your date of birth, personal information key,
Okay.
your landing documents, the timeline that you landed, blah, blah. The person needs to have it. The income you made prior to landing, the income you made when you landed, which probably, if it's December, will probably be zero, maybe, I don't know.
0.
So that, then if you have property where you're coming from, that will be important. Sometimes people, okay, we're being recorded, so I will say you should excuse me.
Just come for consultation, right? So we talked
Thank
about
you.
SDA.
I think that's fine. Okay.
We talked about SDA Business Solutions, and she and her husband owns that business. So just, there's some questions that are personal and you don't really want to go deep into it, but the answer is you file your tax, period. And everything you need, you will ask them and they will be able to guide you. Right?
Yes.
Fantastic. Do you have any other question that is not personal that you want to add to what you've asked?
No. I think I will require a consultation.
Mhm. Okay, it's
It's fine.
yeah.
Thank you very much.
No problem.
Okay, so I don't know, is there any final thing you want to share before so that we can round off? But really, we're not many, but the questions were great. I think a lot of people are making money with capital gains here. So so is there anything else you'd like to add before we go?
So what I'll just say, I'll round up is, and I'm not marketing myself, even if I want, yes, I want business, I want you to file taxes with us, I want you to do consultation with us and blah blah. An adage says, whoever asks for the way, I'm going somewhere and I don't know where I'm going, I don't know how to get there, will probably get there faster and will get to his or her destination safe and sound. But you don't ask questions, a journey of a day will take you like a year. And it becomes bothersome, cumbersome, and a lot of times heartbreaking for you to do things long journey wise when you could have taken a shortcut. Yes, sometimes shortcuts are not ideal, but you ask questions, you don't regret asking the right questions to the right people. You can also ask questions and you now direct those questions to the wrong audience. You obviously hit a roadblock. So it's important to ask questions. It's important to consult where it is you are not well versed in whatever it is you're doing. Someone came in newly, he wanted to file his taxes. He asked me, how much, and I gave him the price. He said, that the next person next door is charging X amount. You can actually do it free some places, So we really don't need to patronize me. I'm not the only tax preparer, blah blah. Long story short, he filed his taxes himself. He used one of the free softwares and all that. Filed his taxes himself, and he came back with a 5,000 tax liability. This person just came in December. So he had technically not worked in Canada. He had no income in Canada. So how are you able to amass 5,000 tax liability for December, coming in December? What did you do? I couldn't ask him what he did. So he came back to me and said, oh, he has a tax liability of 5,000, blah, blah, blah. And I said, oh, my fee then, I think at that point we were charging, let me just hypothetically, we're charging $100. And then he went and then amassed 5,000 tax liability. And then he says, oh, can we help him with it? And I said, oh, of course, your fee is 1,000 now. And he's like, but I was charging on that. I said, that was when I was going to file it for you without, without trouble. But you went and looked for 5,000. For me to wipe out that 5,000 is additional skills. So you're going to have to pay that 1,000. He had to pay it. So I'm sorry, it was an expensive experience for the person. But the person is now 100% our client, and the person has introduced a whole lot of newcomers, So is it cheaper to do it yourself? Yeah, expense-wise, yes, but experience-wise, I don't think so. I think I will round up with that so that
Thank you so much. Stella Great said, people say this, Oye Naju Ajuju Amafunzo. It is Igbo adage, meaning either ask question does not misroad. Yes, and we have it in Yoruba too. Abere no kinshino is thank you so much. I hope I did not butcher the Igbo language, but I'm happy to tell you that we have Igbo language coming soon. And my Igbo will be better. So Dalu. Thank you for sharing that. So and you're right. I mean, since I've been in Canada, my first page check was super low. I call it transferring your risk, because when CRA can come back and say, what do you mean by this? And you just pass it to them and say, oh gosh, what are you doing for me? You hear me?
Figure it out, yeah.
It's exactly. But if you do it yourself, it's the onus is on you to respond. And that's why we talk about mentoring. We talk about, because when somebody guides you, they tell you their story, it makes your story better. You're able to take the good out of it and leave the not so good. So Ms. Eyitayo, thank you so very much. Seriously, it's been very engaging. Thank you so very much for your time. Thank you to your business, to you and your husband, for the support of CAP for years, since inception. We are truly grateful, and I'm talking since inception of CMP in 2018. We're truly grateful. Thank you for sharing your skills, your expertise.
Thank you.
We just hope that your money that you'll be charging us will not be more now that you now have your...
that one for sure. That one is for sure.
But we truly appreciate it. And to everybody that joined, thank you, because the questions were very engaging, and I'm sure that anybody watching this later will thank you all for it. So on that note, this is to wish everybody a fantastic rest of the night and all the best for the week.
Thank you so much for having us.
Thank you. Have a great day.
You too. Good night. Good night, everybody. Thank you.
Good night, madam.
Good night.